So welcome back guys to Trade Pro FX. So today we will be discussing about one major thing. We won't talk about the Deriv trader or the Deriv trading bot. I want us to focus on those people who trade the MT5. That's the MetaTrader 5 or MT5 to trade either an uptrend or a downtrend. And we will only discuss about one essential tool called the Fibonacci Retracement tool, which is very useful in terms of trading. This one is usually used by also the pro traders to trade in the Deriv or the forex markets. So most of it you normally hear people talking about it to trade during the forex markets. But for now, I will be teaching you how we use this tool to identify our key zones trading on the Deriv trading view, and you can use to predict the markets, whether you buy for a certain period or you sell for a certain period. So basically it's just an essential tool in the trading journey. So we first know what is this tool essential for. So it's a popular tool that is used for traders to identify potential support, and you can remember it's usually very essential for identifying a potential support and resistance. I hope we are together to that area. So it helps to to identify a potential support and resistance, and we have talked about these things before, talking about the resistance and support, and we won't get there. So it helps us to identify these areas of support and resistance. So traders identify these potential support and resistance levels in price movement, and it's normally based on the Fibonacci sequence with the key levels. Like number one, we have something we call the 23.6%. So that's the first key we normally look at. And I will show you how it behaves. The second one is the 38.2%. I hope we are together. We just want to go step by step, and I'll show you how you use these levels. So, and the third one, we have the 50% key level. That's the next one. Let me press them there. So the next one, which is very essential, we have the 61.8%. Very essential. And at most, for those people now who like to complete, they can use now the 100%. But now on Fibonacci, you will realize how they are placed. So we have those key levels now. These levels helps the traders determine where prices might reverse. So if the market was moving like that, creating higher highs, higher lows, so it shows you if the market will currently reverse to the downside or move to the upside. So these key levels helps us to identify where the prices might reverse or continue with their trend. So with that in mind, now assuming now you have logged into your trading Deriv view, then you have now your chart like this. So you choose any market of your wish. So you can choose any market of your wish, and I will be choosing something like Volatility 75, which most of the traders in Deriv trade. This is Volatility 75 on the daily time frame. And after you search for your market, as I have done, Now it's time now to ask yourself, where do I find this Fibonacci retracement tool? And the Fibonacci retracement tool, you will find it on the top of this place here. So you'll just click there. Then here are all the tools, but we are focused on this top Fib retracement. That's the Fibonacci retracement tool. And then you click, you have now it. You are now expecting to place it in either of these area of the market, assuming that now you have found your market at this area or at before it has reached this point. So we want to assume that your market is at this area. So this entire market, you don't know how the market is going to move. So we want to know, with the support of the resistance using the daily time frame, however we can spot an entry using the Fibonacci retracement. So I'll come and pick my Fibonacci retracement, and then you have identified now the other key zone is to look that now what direction is the market moving. So for an uptrend, you click just the Fibonacci from the lowest trade, but for the now we have this downtrend. So let me just illustrate about using this downtrend. So what do you do for a downtrend? Click on from the highest point here. So I want to use the Fibonacci retracement. So if for this when I click the Fibonacci retracement, I will pick the highest point, which is this area. So because it's the area I want, this is the area I want to get focused on. So I'll pick this area, which is the highest there, then pick this one as the lowest area point. So with that, now I have now marked my areas, that the key zones that I will place my Fibonacci retracement from there then to this area. So now let me pick my tool. So you pick your Fibonacci retracement tool. As I've picked it, then pick at that area. That's the highest. This is for a downtrend, guys, to the lowest point, and then I get my tool down to the lowest point, which is that area. Make sure it's exact, and then you can see now we have the numbers I told you. We have the 23.6%, then we have 38.2%, then we have 50%, and then we have 61%, and then we have the 100% on top. So basically with that knowledge, you can see if you want to convert this to percentage, you'll just multiply by 100 and it will be the same. So they have interpreted it. You can use you can just double click at that point, go to the settings, and then you can either remove all the unnecessary marks. So if we want the 23%, we want this 0, then we want the 23. So we have highlighted it. We want the 38.2%, the 50%, the 60, these 61%, 61.8%. Then we don't need this one, and we have 100%. So you can remove all the other key zones, and then we have now this area called the 0.5, which is also 50%. So I'll just make this one a yellow zone there, or let's just look for a good so let me pick which has not been picked. So I'll make mine, let's just use the green, and then for this one let's use the yellow. So for the visibility, it's 100, it's good. So all the others should be like that, no issue, they should remain default. Then click OK. So I want to focus on this area, the 50%. That's where most of the the market get to reverse. So you pick your rectangular shape there, then click on your 50 area of concern, then move or stretch to them where the market is trending, and we can see. And then for the second area of concern, maybe for in case the market moves slightly a bit, you can pick the 61.8, but mostly it respects the 50% level. And how did the market do? Using this daily time frame, the market went down, then as it was moving up, just slightly closed this 50 the zone on the 50%, then went up to that area, and then from this area now it has tried to move, trying to cross this area, and it has not able to cross that area, and definitely the market has gone down. So what does that tell you? The Fibonacci retracement on the 0.5 or the 50 USD, the 50% is very essential. These two key zones are very essential and can help you make good amounts while trading. So that's for a swing trader. We want to now to join at 2-minute candlestick and see how whether the Fibonacci retracement is good to predict a trend of the market. So with that, let's now see how it behaves on a 2-minute candlestick. So guys, the Fibonacci retracement is very good, and it helps to show the support and the resistance, and you have seen how the price reacts at these levels. So if the price bounces off the Fibonacci retracement, it could indicate a strong support or resistance. So for those people who normally ask me, I don't know how to identify those key zones you talk of, the support and the resistance, the Fibonacci retracement got you. So let's now see whether you can predict the market using this Fibonacci retracement. This now is an uptrend. For an uptrend, you click your Fibonacci retracement and then click from the, now this is for an uptrend. We discuss about this one. You click now from the lowest point, which is this point. Then the next high or the swing high is the point you need to mark. So the highest point is that area. So I mark my 50 USD point. And I told you the market mostly reacts when it reaches the 50 USD. And what did the market do? As it was moving up, you did not reach at this market, did not reach at the 50 zone. So you would have waited until the mark 50% zone is tapped. And what did the market went? Made some consolidations. Then at long last, it tapped the 50%. And remember, this is at 2 minutes. So it's a lower time frame, and which can help you scalp, get something from it. It tapped and went up. So after moving up, the market, then you want now to determine at what point then again with the market. So it has come, you have ensured this is the candlestick and this is the swing low. So I'll just pick my Fibonacci retracement again, mark from the top highest point. Now this one is for a downtrend. Click from the highest point or the swing high, then to the low point, swing low. And then after there, I go to my Fibonacci retracement, look for the 50% wherever it is. So this is the 61.8, this is the 50, and then I mark at that zone. And what did the market do? Went down from that area. So what did the market do? Went down from that area, which is the top up, then reached at the 50% and then went down. So basically guys, that's how we use the Fibonacci retracement. Very simple as that. So make use of this Fibonacci retracement to make some scalping, either if you are a swing trader or a scalper, and that we will meet in the next video. I hope if you have grasped something, kindly subscribe to this channel and stay tuned for more videos.